Our last market master of the year 2016, and what a super voice to end the year with. Let me welcome Nilesh Shah, the Managing Director at Kotak Mahindra Asset Management, who generally lends a very sane voice to what could be a very chaotic market in the first part of 2017. Nilesh, good morning and greetings of the season to you and your team at Kotak Mahindra. Is the mood still somber with respect to demonetization? Because last time when we spoke to you, you were a bit cautious. Do you think that things could get worse in the first part of the year?
I think the appropriate word will be somber, because a lot of things which are happening on ground, we are able to collect data on an anecdotal basis. So one side, we have seen that the Rabi season crop planting is up 6% on an average. Then there is a feedback that these are not remote sensing satellite estimates. These are eye catchers estimate, and there could be some data discrepancies over here. Now we don't know where the truth is. The gut suggests that if your reservoir water levels are above 10-year average, hopefully Rabi season should be good from a water point of view, from a moisture point of view. But if cash shortages have created trouble in terms of buying of seeds and fertilizer, there could be worry. So I think the market, and we remain little bit circumspect. We want to see the data and then take a call. And today lots of data is being thrown about which are more anecdotal. I think it will be fair to wait for the results and also hear from companies how they are expecting their business to shape up in first quarter FY18.
Okay. Nilesh, yesterday and today there has been, yesterday there was a very big DII number. You suspect it is NAV propping?
No,
okay.
I don't think so. Now we are in a market where we have to prop our NAVs at the quarter end. We are being evaluated on a daily basis. This DII buying is purely function of the level of the market and the stocks which are available. One, we have been receiving fair amount of flows. There are almost 1.15 crore SIPs giving us 3,800 crore every month. And what we have seen is that whenever markets have corrected below 8,000 Nifty, then there is a fair amount of lump sum investments through systematic transfer plan. So this is the cash which we are receiving on a daily basis, which we are deploying into market whenever opportunity arises. Gone are the days where I was judged based on my quarterly performance. I'm judged now on a daily basis.
Okay, fine. That's good to hear that this is not NAV propping, but actual SIP flows that is being invested at lower levels. Nilesh, from the anecdotal evidence you have so far, what are the sectors that you would be wary of in January?
Essentially, the one big sector to worry will be related to real estate. Clearly there is a slowdown happening over there in terms of fresh supply as well as construction. So every sector related to real estate could be, cause of a concern. The second thing is related to gold and jewelry. Clearly there is a drop. Contrary to claims that because of demonetization gold prices will shoot up, actually post demonetization they are down about 10%. So gold jewelry and distribution is one other sector where one needs to be careful. My guess is that going forward it's far more going to be how much of bad news has been priced into the stock price. At a price, even some of the depressed sectors will be a buy. And at a price, some of those well-performing sectors also will be a sell. So going forward, it's going to be far more stock-specific market. How much of news has been priced into that stock?
Okay. Well, now the demonetization is over. The focus will now shift to what the government will do in order to, stoke an economy which is low on cash. What are you expecting from the government this budget?
Essentially, I expect a magic from them. I expect them to cut tax rates so that consumption gets boosted. I expect them to spend money on infrastructure so that the slowdown in private capex can be compensated to a great extent. And I also expect them to honor their fiscal deficit commitment, which they delivered in last budget at 3% of fiscal deficit for FY 2018. So essentially, I'm expecting government to raise revenue through innovation. We believe in demonetization. As per today's headline, about 4 lakh crore has been deposited, which could be whether they have passed through the tax net or not is debatable. Now, if you can go after that 4 lakh crore worth of deposit and you can catch them under Pradhan Mantri Garib Kalyan Yojana or through some other mechanism, that's potentially tax collection of 200,000 crore. That's good enough to give tax concession, that's good enough to spend on infrastructure, and that's still good enough to maintain your fiscal deficit commitment. So essentially, I expect government to be innovative in terms of spending as well as raising revenue.
Well, Nilesh, if you could stay on, there's one sector which appears to have some positive news. We understand from newspaper reports, a Business Standard report, that there could be a debt